How much is your money worth? It seems like a simple question. You look at the number printed on the bill or the balance on your screen, and you accept it. It is a fact. But what if that fact is an illusion? What if the money in your account, the very lifeblood of our modern world, isn't really there? What if it was conjured into existence by a trick so powerful and so widely accepted that it built our civilization, and a trick so dangerous that it could, at any moment, bring it all crashing down? This is not a story of goldsmiths or kings, not of a specific time or place, but of an idea. A simple, almost alchemical idea that became the silent engine of the modern world. This is the story of fractional reserve banking. Imagine a vault. Not just any vault, but a deep, cold stone chamber, lit by a single flickering torch. In this vault, people store their gold. They are given a paper receipt, a promise that their treasure is safe. For a while, that is all that happens. The gold sits inert, a dead weight in the darkness. But then, the goldsmith, the keeper of the vault, notices something. The receipts are beginning to circulate. People are trading them for goods, trusting the paper more than the hassle of retrieving the actual gold. They rarely, if ever, come for the actual gold. And here, in the dim light, a dangerous thought is born. A thought that would change the course of human history. If the gold just sits there, could we not lend out some of it? Could we write new receipts, new promises against that dormant treasure? The first time it was done, it must have felt like a crime. It was a breach of trust, a silent betrayal. But it worked. The borrower got their capital. The goldsmith earned interest on gold he still technically possessed. And the original depositor slept soundly, unaware their wealth was now serving two masters. This was the primordial seed, the first trembling step into a world of financial mirrors. This simple, deceptive practice evolved. The goldsmiths became banks. The vaults became vast ledgers. And the trick was refined, codified, and woven into the very fabric of our economy. This is the system of fractional reserve banking. The principle is deceptively simple. When you deposit $1,000 into your bank, the bank does not lock it away. It is required to keep only a fraction of that deposit, a reserve, on hand. The rest, the overwhelming majority, it is free to lend out to someone else. Think about that for a moment. Your money, the money you believe is sitting in your account, is simultaneously loaned to a business, to a family buying a home, to a student financing their education. The same single dollar is doing multiple jobs. It has been duplicated. It has been created from nothing.
This is the confrontation, the central, unnerving truth of our system. Money is not primarily created by a government mint printing bills. It is created by private banks every time they issue a loan. The moment a bank approves a mortgage, it doesn't hand over a suitcase of existing cash. It types numbers into an account. It creates a new deposit out of thin air, and in that moment, the money supply of the nation grows. It is an act of pure faith, a belief that the future will be productive enough to justify this phantom currency in the present. This magic trick is the source of our phenomenal progress. It is the grease for the wheels of industry, the fuel for innovation, the means by which societies build bridges, cities, and technologies that would be impossible if we were limited to the money we actually had. It is the engine of growth, allowing us to pull the prosperity of the future into the needs of today. But every engine can overheat. Every trick has a price. Because this system is built on a foundation that is, by its very nature, a lie. The lie is that all the depositors can have their money back at once. The bank has promised your money back on demand, but it has also promised that same money, in essence, to a homeowner for 30 years. It is a beautiful, necessary illusion, but an illusion nonetheless. And it is terrifyingly fragile. It requires one thing above all else: confidence. All it takes is a whisper, a rumor, a shadow of doubt. If enough people lose faith and rush to the bank to withdraw their deposits, the illusion shatters. The bank, having loaned out the vast majority of its money, cannot possibly honor all those claims. The doors close. The windows are shuttered. The life savings of thousands vanish into the digital ether from which they came. This is a bank run. It is the monster lurking in the basement of our financial cathedral, the collective nightmare that turns the trick into a trap. To tame this monster, a greater power had to step in, a lender of last resort, a central bank. Its role is to be the ultimate backstop, to promise to provide limitless liquidity in a crisis, to assure the public that the banks will not fail. It is the director of the grand illusion, ensuring the audience never loses faith in the magic. It sets the reserve ratio, that small fraction that must be held back, and it stands ready to print emergency money if the phantom currency threatens to evaporate. This is the resolution, a delicate, managed equilibrium, a system where money is perpetually created from debt, fueling an endless cycle of growth stabilized by the watchful eye of a central authority. It is not a perfect system. It is a messy, human, and profoundly risky compromise.
So, we are left with a profound and unsettling legacy. The trick that creates money from nothing is the greatest show on earth. It built our world. It gave us homes. It funded our educations, and it powered our industries. It is a testament to human ingenuity, to our ability to create something from an idea, from a shared belief. But that same trick carries a deep human cost. It inflates bubbles of speculation that inevitably burst, ruining lives. It encourages a mountain of debt that burdens generations. It turns the entire economy into a high-wire act where a single misstep can lead to a devastating fall. We are all, every one of us, actors in this performance, believing in the value of numbers on a screen, trusting that the vault is not as empty as it truly is. The money in your account is real in its consequences, but it is a phantom in its origin. It is a promise, a loan, a shared dream of value. We live our lives, build our futures, and define our power and wealth within this dream. The question is not whether the trick is real. The question is, how long can we keep believing in it? The greatest trick wealth ever pulled was convincing the world it actually exists.